Have you ever noticed how some people seem calm no matter what happens with money, while everyone else panics? The economy crashes, prices rise, layoffs start happening, the stock market turns red, and suddenly people begin making decisions they regret for years. They stop investing. They sell at the worst possible time. They avoid opportunities. They stay stuck in jobs they hate. And most of the time, they don't even realize what's actually controlling them. Fear, not lack of intelligence, not lack of opportunity. Fear. And the scary part is fear doesn't always feel dangerous. Sometimes fear disguises itself as being responsible. It whispers things like, maybe now isn't the right time. What if you lose money? What if things get worse? What if you fail? And before you know it, years pass. You're working harder, you're earning more, but financially, you still feel trapped, still anxious, still uncertain, still afraid. Have you ever avoided investing because you were scared of losing money? Have you ever stayed in a financial situation you knew wasn't helping you, simply because uncertainty felt terrifying? Have you ever convinced yourself that playing it safe was smart, only to realize later that safety was quietly costing you your future? Because that's what most people never realize. Fear doesn't just stop people from taking risks. Fear stops people from growing. And when fear controls your money decisions, it slowly controls your future. The worst part? Most people won't notice until years later, until they realize inflation quietly destroyed their savings, until they realize opportunities passed them by, until they realize emotional decisions became expensive decisions. And by then, the damage is already done. But today, we're going to talk about how fear silently controls your financial life, and more importantly, how to break free from it. Because once you stop making money decisions based on panic, anxiety, and emotional survival, everything changes. And that's where this conversation begins. Before we continue, if you genuinely want to improve your financial future, do me one small favor. Take 2 seconds to like this video and subscribe to the channel. Not for the algorithm, not for vanity, but because there are millions of people silently struggling with money stress, financial anxiety, and fear-based decisions, and most of them are never taught how money actually works. Every like helps this message reach more people who need it. And every subscription helps this channel continue creating content that can genuinely change someone's financial future. You never know who might see this video at the exact moment they need it most. Now let's get into something that could completely change the way you think about money forever. Money is one of the most emotional parts of life. People pretend it's logical. They pretend every financial decision is calculated. But if you really pay attention, most money decisions are emotional reactions disguised as logic. Why do people panic sell during market crashes? Why do people avoid investing for years, even when they know they should start? Why do people overspend to impress others? Why do people stay financially stuck even when opportunities are available? Fear. Fear of losing. Fear of failing. Fear of uncertainty. Fear of judgment, fear of not having enough. And once fear takes control of your financial life, it changes the way you think. It narrows your perspective. It pushes you into survival mode. It convinces you that avoiding discomfort is more important than building a better future. This is why so many people work hard for years but still feel financially insecure. Because hard work alone is not enough if fear controls your decisions. Think about this. 2 people can make the exact same amount of money. One slowly builds wealth. The other stays trapped in financial anxiety. Why? Because financial success is not just about income. It's about behavior. And behavior is emotional. Most people think wealth is built through intelligence alone. But often, wealth is built through emotional discipline. the ability to stay calm when everyone else panics, the ability to think long-term when everyone else thinks short-term, the ability to make strategic decisions instead of emotional reactions. And here's the truth nobody talks about. The world profits from your fear. Fear sells headlines. Fear drives clicks. Fear drives emotional spending. Fear keeps people dependent. Every recession creates panic. Every market drop creates fear. Every economic uncertainty creates emotional reactions. And emotional people make expensive financial decisions. But financially successful people understand something most people never learn. Fear is normal, but allowing fear to control your decisions is optional. That's the difference. And by the end of this video, you're going to understand exactly how fear silently manipulates your financial behavior, how it keeps people stuck for decades, and most importantly, how to stop fear from controlling your money decisions forever. Because once you understand this mindset shift, you stop reacting emotionally to money. You start thinking strategically. You start building confidence. You stop chasing short-term comfort, and you begin creating long-term freedom. But to understand how to fix this problem, we first need to understand just how expensive fear really is. And most people have no idea. One of the biggest lies people tell themselves is this: I'm just being careful. But sometimes being careful is actually fear wearing a smarter disguise. And that distinction changes everything. Imagine two people. Both earn decent incomes. Both know they should invest. Both understand inflation exists. But one person starts investing slowly and consistently. The other keeps waiting. Waiting for the perfect time. Waiting for the economy to feel safer. Waiting for certainty. Waiting until they feel ready. 5 years pass, then 10, and suddenly the second person realizes something terrifying. The cost of waiting was far greater than the cost of starting imperfectly. This is how fear quietly steals wealth. Not dramatically, silently, gradually, patiently. And the worst financial decisions are often the decisions people never make. People think losing money is the greatest financial danger. But sometimes missing opportunities is even more expensive. Think about how many people avoided investing after hearing horror stories about market crashes. Then years later, they watched the market recover while their savings lost value, sitting in low-interest accounts. Fear made them feel safe. But safety came with a hidden price. And that's the dangerous thing about fear-based decisions. They often feel good in the moment. Fear gives temporary emotional relief. Selling investments during a market crash feels safer emotionally. Avoiding risk feels comforting emotionally. Holding on to cash feels secure emotionally. But financially, those emotional decisions can create long-term damage. Because wealth is usually built through consistency, patience, and long-term thinking, not emotional reactions. This is why so many people sabotage themselves financially without realizing it. They focus more on avoiding short-term discomfort than building long-term stability. And fear thrives in uncertainty. The moment the economy feels unstable, people panic. News headlines become louder. Social media becomes more emotional. Everyone suddenly becomes an expert. And emotionally overwhelmed people begin making irrational decisions. But here's what financially disciplined people understand. Uncertainty is normal. There will always be market crashes. There will always be economic fear. There will always be reasons to panic. If you wait for certainty before making financial decisions, you may wait forever. And that's why fear becomes so expensive. Because fear delays action. Fear delays learning. Fear delays growth. Fear delays opportunity. And every year spent avoiding growth compounds into years of missed potential. Now think about emotional spending. This is another area where fear quietly controls people. Many people spend money not because they truly need something, but because spending temporarily relieves emotional discomfort. Stress shopping, impulse buying, lifestyle inflation, trying to look successful, trying to feel secure, trying to escape anxiety. People buy things hoping to create emotional certainty. But external purchases rarely solve internal fear. In fact, emotional spending often creates even more stress later. Debt increases. Financial pressure grows. Anxiety becomes worse. And people become trapped in cycles they don't understand. But here's something most people never think about. Fear affects income too. How many people stay in jobs they hate because they fear uncertainty? How many people never negotiate salaries because they fear rejection? How many people avoid learning valuable skills because they fear failure? Fear limits earning potential just as much as it limits investing behavior. And this is why financial growth requires emotional growth. Because if fear controls your thinking, it eventually controls your actions. And actions determine outcomes. Now here's where things get really interesting. Most financially successful people are not fearless. That's the myth. They feel uncertainty too. They feel anxiety too. They experience doubt too. The difference is they don't allow fear to become the decision maker. They understand something powerful. Every meaningful financial opportunity involves uncertainty. Every investment involves uncertainty. Every business opportunity involves uncertainty. Every career transition involves uncertainty. Growth itself involves uncertainty. And once you understand that uncertainty is normal instead of dangerous, fear starts losing power over you. But fear becomes even more dangerous when it combines with another mindset that quietly traps millions of people: scarcity. And this is where many financial problems become psychological prisons. Have you ever noticed how fear changes the way people think? When people are afraid financially, they stop thinking clearly. They stop thinking creatively. They stop thinking long-term. Everything becomes about survival. And survival thinking creates scarcity. Scarcity mindset is one of the most dangerous financial traps in existence. Because once someone believes there's never enough money, enough opportunity, or enough security, they begin making decisions from panic instead of possibility. And that mindset changes everything. Imagine someone constantly worried about money. Every bill creates stress. Every unexpected expense creates anxiety. Every financial decision feels emotionally heavy. Eventually, money stops becoming a tool. It becomes a source of fear. And when that happens, people start behaving differently. Some begin hoarding money because they fear loss. Others overspend because temporary pleasure helps them escape stress. Some avoid checking bank accounts. Some avoid learning about investing because ignorance feels emotionally safer. And many people become trapped in financial paralysis. They know they should improve their situation, but fear keeps them stuck. This is why financial problems are often emotional problems first. Most people don't fail financially because they're stupid. They fail because fear changes their behavior. And scarcity mindset creates tunnel vision. When people believe resources are limited, they focus only on immediate relief, not long-term growth. That's why people trapped in scarcity often make short-term decisions that create long-term pain. For example, someone stressed about money may avoid investing because losing even a small amount feels terrifying. But over decades, inflation quietly destroys their purchasing power. Someone afraid of uncertainty may stay in a low-paying job forever because change feels risky. But staying stuck carries its own hidden risk. Someone emotionally overwhelmed by debt may ignore it completely because facing reality feels painful. But avoidance only increases the problem. And here's the scary part. Scarcity mindset can affect people regardless of income. There are people earning six figures who still feel financially insecure. Why? Because fear is psychological. Someone can have money and still feel scarcity. They still feel like it's never enough. Still feel anxious. Still feel unstable. Still fear losing everything. And when fear becomes your financial identity, peace becomes impossible. This is why emotional discipline matters more than most people realize. Because financial freedom is not just about numbers. It's about emotional stability. Now let's talk about something uncomfortable. Comparison. Social media has amplified financial fear dramatically. Every day, people see luxury lifestyles, expensive vacations, new cars, designer clothes, perfect-looking success stories. And subconsciously, people begin comparing their lives. Fear enters quietly. What if I'm behind? What if I'll never catch up? What if everyone else is succeeding except me? And comparison creates emotional spending. People start buying things to appear successful, not because they truly value them, but because they fear feeling inadequate. This is how insecurity becomes consumer behavior, and companies understand this psychology extremely well. Fear is profitable. Insecurity is profitable. People who feel emotionally uncertain are easier to influence. That's why advertising constantly targets identity and emotion. Because emotional people spend emotionally. But financially confident people think differently. They stop trying to impress people. They stop chasing external validation. They stop measuring success through appearances. And once that shift happens, financial decisions become calmer, more intentional, more strategic. Now here's another hidden problem. Fear often creates avoidance, and avoidance quietly destroys financial progress. How many people avoid checking their bank accounts because it creates anxiety? How many people avoid budgeting because they fear feeling restricted? How many people avoid investing because they fear complexity? How many people avoid learning about money because they feel embarrassed they don't already understand it? Avoidance feels comforting temporarily, but avoidance compounds problems. And most financial stress becomes worse when ignored. This is why financially successful people develop a different relationship with discomfort. They stop running from it. They face it directly. Because growth requires confronting uncertainty. Now, let's talk about one of the most dangerous beliefs fear creates. The belief that safety equals security. This belief keeps millions trapped. People stay in comfortable situations because uncertainty feels dangerous. But comfort can become a prison. A stable paycheck can feel secure until layoffs happen. Keeping cash feels safe until inflation destroys value. Avoiding risk feels responsible until years of missed growth become impossible to ignore. And this is why financially successful people focus on calculated risk instead of emotional safety. They understand something most people never learn. There is no completely risk-free financial path. Every decision carries risk. The question is not whether risk exists. The question is whether the risk is worth the potential reward. And once people stop seeing fear as a stop sign, they begin seeing it as part of growth. That shift changes everything. Now here's where things become powerful. The moment people stop asking, "How do I avoid fear?" and start asking, "How do I move forward despite fear?" their financial life begins changing. Because courage in personal finance is not about feeling fearless. It's about acting wisely even while uncertainty exists. That's how people slowly build confidence. Not through perfection, through action, through learning, through repetition, through small disciplined decisions repeated over time. And eventually, something incredible happens. Fear stops controlling every financial choice. People begin thinking more clearly, more patiently, more strategically. And that's when real financial growth finally becomes possible. But how exactly do financially disciplined people build that level of confidence? How do they stop reacting emotionally to money? And how do they train themselves to think long-term instead of living in constant financial anxiety? That's exactly what we're going to talk about next. Here's the good news. Fear does not disappear completely, but it can lose control over your decisions. And the first step toward financial confidence is understanding something simple. Confidence is not created by certainty. Confidence is created by preparation. Most people wait to feel confident before taking action. But confidence usually comes after action, not before it. Think about learning how to drive. The first time feels terrifying. Everything feels uncertain. You overthink every movement. Every turn feels dangerous. But eventually, repetition creates familiarity. And familiarity creates confidence. Money works the same way. The more you learn, the less fear controls you. This is why financial education matters so much. Fear thrives in ignorance. People fear investing because they don't understand investing. People fear budgeting because they associate it with restriction. People fear debt because they feel powerless. But knowledge changes emotional reactions. When you understand how compound interest works, investing feels less intimidating. When you understand cash flow, budgeting feels empowering instead of restrictive. When you understand how banks, debt, and inflation work, money stops feeling mysterious. And that's where confidence begins. Not through hype, not through motivation, through understanding. Now here's another mindset shift that changes everything. Stop trying to avoid all financial mistakes. That's impossible. Every successful investor has made mistakes. Every entrepreneur has made mistakes. Every financially disciplined person has made bad decisions before. Mistakes are part of growth. But fear convinces people mistakes are unacceptable. And because they fear mistakes so much, they avoid action entirely, which often becomes the biggest mistake of all. Think about someone who spends 10 years waiting for the perfect time to invest. They watch videos, read articles, study the market endlessly, but never start. Not because they lack intelligence, because they fear being wrong. Meanwhile, someone else starts small. They learn gradually, make mistakes, improve slowly, and over time, their confidence grows because experience teaches lessons that overthinking never can. This is why action matters so much financially. Action creates feedback. Feedback creates learning. Learning creates confidence. And confidence reduces fear. Now let's talk about long-term thinking. This is one of the most powerful weapons against financial fear. Fear focuses on immediate discomfort. Long-term thinking focuses on future outcomes. For example, a market crash feels terrifying short-term, but historically, markets recover over time. Learning a new skill feels uncomfortable short-term, but over years, that skill can completely change your income. Saving and investing consistently may feel slow today, but over decades, small, consistent actions compound into enormous results. This is why wealthy thinking often looks boring, because wealth is usually built slowly, patiently, consistently, not emotionally. Most people want quick financial relief. Financially disciplined people focus on long-term financial positioning. That difference changes everything. Now, let's discuss systems. Financially successful people rely less on emotions and more on systems. Because emotions change daily, systems create consistency. automatic investing, automatic savings, monthly budgeting, emergency funds, debt repayment plans, long-term goals. These systems reduce emotional decision-making. And reducing emotional decisions often improves financial outcomes dramatically. Because when people rely entirely on emotions, consistency disappears. Some days they feel motivated. Other days they panic. Some days they save. Other days they overspend emotionally. That instability creates chaos. But systems create structure, and structure creates peace. Now, think about emergency funds. One reason people panic financially is because they lack financial breathing room. Every unexpected expense feels catastrophic. Every setback feels dangerous. Every emergency feels like proof that life is falling apart. But emergency savings create emotional stability. They create psychological safety. And psychological safety reduces fear. This is why financial discipline creates emotional freedom. Not because money solves every problem, but because stability reduces panic. Now let's talk about identity. Many people unknowingly build identities around fear. I'm bad with money. I'll never understand investing. I'm just not financially smart. I'll probably always struggle financially. These beliefs become self-fulfilling because identity shapes behavior. If someone believes they are financially incapable, they stop trying to improve. They avoid learning, avoid responsibility, avoid growth. But financially successful people often adopt different identities. I'm learning. I'm improving. I'm becoming financially disciplined. I'm capable of understanding money. That shift matters because growth starts internally before it becomes visible externally. And this is why mindset is not just motivational nonsense. Mindset affects behavior. Behavior affects decisions. And decisions affect outcomes. Now here's something powerful. Financial confidence is built through small wins, not massive overnight transformations. Tracking expenses consistently, saving your first emergency fund, paying off one debt, learning one investing concept, increasing income gradually. Each small step builds evidence, and evidence builds confidence. This is why consistency beats intensity. People often look for dramatic financial breakthroughs, but most wealth is built through ordinary habits repeated for years. And once people stop chasing instant results, financial anxiety begins decreasing because now they're focused on process instead of panic. Now here's another important lesson. Your environment affects your financial mindset. If you constantly surround yourself with negativity, panic, fear, and scarcity thinking, it becomes harder to think clearly. The news profits from panic. Social media profits from comparison. Fear-based content keeps people emotionally reactive, but emotional reactions rarely build wealth. This doesn't mean ignoring reality. It means learning how to stay informed without becoming emotionally controlled. Financially disciplined people protect their focus carefully. They understand that what enters the mind eventually influences decisions. Now think about the people you surround yourself with. Are they constantly negative about money? Do they believe wealth is impossible? Do they mock discipline? Do they normalize financial chaos? Because beliefs are contagious, and environments shape expectations. This is why growth sometimes requires changing your circle, your habits, and your information sources. Not because you're trying to become superior, but because you're trying to become intentional. Now here's the truth most people never hear. Financial confidence is not about becoming fearless. It's about becoming resilient. Resilient enough to handle setbacks without panic. Resilient enough to stay disciplined during uncertainty. Resilient enough to continue learning even after mistakes. Because setbacks are normal. Mistakes are normal. Temporary losses are normal. The people who eventually build wealth are usually the people who keep going anyway. And eventually, something incredible happens. Money stops feeling like constant emotional pressure. You stop reacting emotionally to every financial situation. You stop seeing uncertainty as danger. You stop making panic-based decisions. And instead, you begin thinking strategically, calmly, patiently, confidently, not because life became perfect, but because you became stronger emotionally. And once emotional discipline enters your financial life, everything starts changing. Not overnight, but gradually. And gradually is how real wealth is usually built. Most people think financial freedom means becoming rich. Luxury cars, massive houses, expensive vacations, designer clothes, the perfect lifestyle. But real financial freedom is much deeper than appearances. Real financial freedom is emotional. It's waking up without constant anxiety about money. It's not panicking every time an unexpected bill appears. It's being able to make decisions without fear controlling your mind. It's peace. And that's the part nobody talks about enough. Because most people spend their lives chasing the image of wealth while secretly living with financial stress. They look successful, but emotionally, they feel trapped. And this is where financially disciplined people think differently. Most people chase money emotionally. Wealthy thinkers chase freedom strategically. That difference changes behavior completely. Think about someone constantly trying to look successful. Every purchase becomes emotional. Every lifestyle upgrade becomes pressure. Every comparison creates insecurity. And eventually, they build a life that looks impressive from the outside, but feels exhausting internally. Because appearances are expensive, and trying to impress people financially is one of the fastest ways to lose peace. Now compare that to someone focused on freedom. They ask different questions. Will this purchase improve my future, or just impress people temporarily? Does this decision increase my stress or reduce it? Am I building wealth or performing wealth? Those questions create completely different financial outcomes. And this is why mature financial thinking often looks boring to other people. Because real wealth is usually quiet. It's discipline. It's patience. It's delayed gratification. And delayed gratification is one of the most powerful financial skills anyone can develop. Fear wants immediate comfort. Wealth rewards patience. That's why emotionally reactive people often struggle financially. They spend to feel better now. They avoid discomfort now. They prioritize temporary relief over long-term stability. But financially disciplined people understand something powerful. Every financial decision is a trade. Every dollar spent today is a dollar that cannot grow tomorrow. Every emotional purchase carries an invisible future cost. And once people truly understand this, their relationship with money changes. Now here's the irony. The people who look richest are not always financially free. And the people building real wealth often look ordinary. Because financially secure people prioritize ownership over appearances, assets over validation, peace over performance. And social media has completely distorted this reality. People compare their real lives to curated highlight reels. They see luxury, but not debt, success, but not stress, lifestyle, but not financial pressure. And subconsciously, people begin believing they're behind in life. That fear creates dangerous behavior, overspending, lifestyle inflation, impulse purchases, constant comparison, and eventually people become trapped trying to maintain lifestyles they can't emotionally or financially sustain. This is why comparison quietly destroys financial peace. Because comparison shifts focus away from personal growth and toward external validation. But financially confident people stop playing that game. They stop measuring success through appearances. They stop trying to prove themselves constantly, and they begin focusing on something much more valuable. Control. Control over time. Control over choices. Control over stress. Because at the highest level, financial freedom is really about options. The option to leave toxic environments. The option to take opportunities. The option to rest when necessary. The option to make decisions from strategy instead of desperation. That's real wealth. And most people never realize this until much later in life. Now let's talk about emotional resilience, because this is where everything changes. Financial freedom is not about eliminating uncertainty. That's impossible. The economy will always change. Markets will fluctuate. Unexpected problems will happen. Life will remain unpredictable. The goal is not creating a perfectly safe life. The goal is becoming emotionally strong enough to handle uncertainty without panic. That's the difference. And financially disciplined people prepare instead of panic. Emergency funds, long-term investing, multiple income streams, financial education, intentional spending. These things create resilience, not because they remove every problem, but because preparation reduces vulnerability. Now, imagine two people during an economic downturn. One panics emotionally. The other stays calm strategically. Same economy, different mindset, different outcome. And this is why emotional control matters so much financially. Because money amplifies behavior. Fearful behavior creates fearful results. Disciplined behavior creates stronger outcomes. Now here's another important truth. You do not need to become perfect financially. You simply need to become more intentional. Most people think financial transformation requires massive dramatic changes overnight. But real transformation usually happens through small, consistent improvements. Learning one financial skill, improving one habit, reducing one emotional spending trigger, increasing savings slowly, building discipline gradually. These small changes seem insignificant in the moment, but over years, they completely transform lives. That's the power of compounding. And compounding doesn't only apply to money. It applies to habits, to discipline, to emotional control, to decision-making. Every disciplined decision strengthens identity, and identity shapes future behavior. Now, think about this. Every time someone chooses long-term growth over short-term emotional comfort, they become stronger. Every time someone invests instead of impulse spending, they strengthen discipline. Every time someone learns instead of avoiding fear, confidence grows. And eventually, they stop seeing themselves as financially helpless. They begin seeing themselves as capable of learning, capable of adapting, capable of growing wealth slowly and strategically. That shift changes everything, because financial confidence is not built through motivational speeches. It's built through evidence, through consistent action, through proving to yourself repeatedly that you can handle discomfort without collapsing emotionally. And once people develop that emotional strength, fear loses power. Not completely, but enough that it no longer controls every financial decision. And that's freedom, not the absence of fear, the ability to move forward despite it. Now here's the final thing financially successful people understand. Money is a tool, not an identity, not proof of worth, not proof of intelligence, not proof of superiority. A tool. And when people stop attaching their self-worth to money, financial decisions become healthier, calmer, smarter, more intentional, because now money serves life instead of controlling it. And that emotional shift creates peace most people spend their entire lives searching for. Not because life suddenly becomes easy, but because fear no longer sits in the driver's seat. And once fear stops controlling your money, your future starts opening up in ways you never imagined possible. Not overnight, but slowly, steadily, patiently, the same way real wealth is built. If this video helped you see in any way to see things beyond your fears, then take a moment to like it and subscribe. It genuinely helps the channel, and it means you'll see more videos like this. And if you know someone who is afraid with money, share this with them. Sometimes one simple idea can change everything. And if you're ready to keep learning, there's another video waiting for you right here. Take your time, and I'll see you there.